This chart is for the clothing giant Next, and we are going to use this chart to teach you how to trade with gaps and how to use gaps as buying opportunities. Now, the market couldn't get above this resistance. It then issued a report about projected profits, and Next actually rose up quite nicely. Now, that gap is a little bit worrying because it's quite a big gap, but how we can actually trade with this is the top of the gap sometimes provides support. So the price could come down, touch the top of the gap and go higher, or it could entirely fill the gap and come down to that second line. Now, these lines are not valid trend lines. We've literally inserted these horizontal trend lines just to mark the gap. So don't think that they are an actual trend line. So if we was to trade Next, what we would want is the price to come down, completely fill that gap and hit the second trend line. That would be where we would be happy to buy these shares. There's no real way to know if the market's going to just touch the top of a price gap and then go upwards. But what we would say is where the market struggled to get above that price, it has pretty much put in a trend line across. So not only would it fill the gap if it touched that trend line, which is a bullish sign, but there also is technical reasons why, because the market found that as a tough resistance, that it wouldn't find it as a resilient support as well. So we would expect that if the price did come down and touch that second trend line, that quite a lot of traders would use that as a buying signal because once a gap has been filled, that is a bullish sign in a setup like this. So that is as good as buying on a support line when a gap has been filled.